right? Whereas things like equities live in the future in that sense, right? So there is that element of pricing or mispricing, whatever you want to call it, right?
And on the physical point, just quickly, Prashant, like there is a risk of people who can't get it. So you can buy and sell equities. Maybe you don't like the price, but you can.
If you don't have it, you don't have it.
There's a risk not just of a higher price, but we're seeing talk in certain parts of Asia of shortages, which is also an acute problem building on top of the chronic that we're talking to.
Please, another question.
Right. Hi, good evening. We've heard the saying that, data is the new oil. And as I reflect on that, I'm smirking because it seems that oil is oil and data needs the oil today.
Right? Well put.
So just wanted to ask you, either of the panelists, what's your take on the AI trade in the US? Does that slow down the entire juggernaut? Will the GCC countries withhold their investments that's going into the AI trade and any other second-order effects?
Excellent question.
Thank you.
Ben, you want to take it?
I do. So it's been, again, slightly overwhelmed by, of course, the Iran situation. But the AI news flow over the last 4 to 6 weeks has been amazing. Incredibly positive in terms of the demand. No sign of a slowdown in demand. No sign of a slowdown in the CapEx. So people worry, is it a bubble? Will the CapEx slow down? There's no evidence of that so far. So I think the AI hyper mega super bull market is still real and ongoing, but will it suffer as a very crowded position in a general risk? I just sell everything, I don't even care what it is because I just want to hide in money. I think that's quite possible. So again, when I'm thinking about my laundry list of things I want to buy, maybe I'm not quite brave enough today, but I want to be brave at some stage in Korea with the memory play that they have. For energy, as you say, of course, is very thirsty for electricity and we don't have enough. So I'm not so heroic. I want to wait for some more clarity. But the AI trade, for your question, I think is still very, very alive. And the data over the last 4 to 6 weeks actually has been supportive of that. But again, it's been just completely overwhelmed, understandably, by the pictures and the reality of the Iranian situation. So I'm still very positive on AI, but I'm a pragmatist. Can it go down in this general risk-off? Of course it can.
I think wonderful question, and I think fantastic response there as well. We could go on, and such a fascinating topic. It's and so many directions we can take to it, but we're out of time. Ben, I want to thank you for dropping by. A wonderful conversation as always. Great insights. Art, we'll of course keep tracking this with you in terms of where oil goes from here, and I think you've got a close eye as anyone has. Thank you very much for taking out the time and joining us.
Long-term wealth continuity planning is essential today. Srinivas Mendu and Nikhil Mudbhatkal of Funds India Private Wealth shed light on estate planning and succession, tax-efficient structuring, and what it takes to build a truly future-ready wealth strategy. Watch Funds India Private Wealth presents The Future of Private Wealth. Conversations on lasting legacies only on CNBC TV 18.
Sir, what do you think?
The new Skoda Kushaq. Easy to love. Skoda.
Oi, need to be intelligent for investing, so Rubik's Cube, Jigsaw, Sudoku, Crossword. Oi, for investing, your app should be intelligent. App?
Trading Signal, Smart Discovery, Secure Exit, Ask Angel.
Angel One, intelligent one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
India का first heavy-duty hybrid AC, Mitsubishi Heavy-Duty AC with long-reach airflow and 3D cooling. Mitsubishi Heavy-Duty. Live life heavy-duty.
Trying to invest in today's market is like getting stuck in a traffic jam. Too much noise, too many turns. Everyone's shouting advice, but no one's really guiding. That's why you need a weekly investment GPS. Translate market noise into smart signals with insights from India's most trusted fund managers. Get a deeper market understanding week on week so you can grow your portfolio with clarity.
Bandhan Mutual Fund presents MF Corner.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
This is Network 18, and you're watching CNBC TV 18.
On the turn of the century, most of the European countries have been free riders from their own security. They downloaded or outsourced their defense.
Well, here's how European indices are being called at the open. The DAX in Germany being called down just shy of 1% at the open there. Slightly more modest decline being called for the FTSE 100 right now. Stocks 50 also called down by just over 0.4%. Asian markets all trading in the red by and large. Here's the picture right now. The Kospi in South Korea off 3.75%. Hang Seng off nearly 2% right now. The only gainer in the region, which you can't see on the screen there, is the Nifty 50 in India just now. Now, PopMart shares are extending declines this morning following a series of downgrades. Bernstein, Morgan Stanley and UBS are among the firms highlighting headwinds for the Chinese toy maker. Well, concerns over the group's reliance on its prized asset, the Labubu doll, also overshadowed its earnings yesterday, with shares in the company losing more than a fifth of their value. Well, investors have grown increasingly concerned that PopMart will not be able to replicate the same success it had with Labubu dolls as it introduces new offerings to the market. Elaine Yu spoke to the Chief Operating Officer. Have a listen.
Our personal feelings might be a bit different from the company's perspective. From a corporate standpoint, of course, everyone has been under pressure since the pandemic, but our company has still been growing very rapidly. Last year, in particular, with the breakout success of Labubu and other characters like Twinkle Twinkle, we saw excellent performance across the board. Whether it's consumption rates, foot traffic, conversion rates, or final sales figures, all our metrics were very strong. Moreover, we can see the vitality in our stores. The customers are happy while shopping. This sense of vitality is important to us. Therefore, this gives us a lot of confidence in the Chinese market, and of course, globally as well. Looking at the overall environment, I think people are going through an adjustment period. The country and society used to grow very fast, and everyone got used to high growth rates. When the growth slowed down a bit, people reacted quite drastically. It used to be very fast, and now it's slower, so people feel they need to slow down and wait. However, once people gradually adapt to this new rhythm, I believe confidence and consumption willingness will return. So, whether from a company or personal perspective, we are optimistic about the market itself. We are just going through a turbulent period of adjustment regarding growth rates.
Do you feel pressure, though, to create the next Labubu soon? Because investors did express concerns about that, and of course the stock took a bit of a hit when there were concerns that the fever was coming down.
First of all, of course there is pressure, but actually this pressure has existed since we started with Molly. Everyone, all the investors, were always asking, how long can Molly stay popular? And they asked this every single year. Later, when Labubu became popular, they asked how long Labubu could last. How long can Twinkle Twinkle last? Every time I said to everyone, it's just like what I said earlier. We don't know how long it will stay popular, and I don't know who the next popular one will be. But what we do know is how it might stop being popular, simply by stopping our investment in it. Actually, we learned from Disney. Disney has been operating IPs for so many years. They have a very simple truth: continuous investment. When you continuously invest in these IPs, it might include developing products, doing collaborations, promotions, maybe making movies, storytelling, building theme parks, and so on. These are all forms of investment. When you keep making the right investments, the IP has the chance to keep going.
And you can catch the full episode of CNBC On Assignment at 10:30 GMT on Saturday and 11:30 British Summer Time on Sunday here on CNBC. Oh, just going to show you the US futures one more time. The US markets had a positive session overnight, but they're all being called slightly lower at the open this morning, only around 1/3 of 1% or so. Big corporate news overnight, of course, is that Meta and Google have lost a case in a Los Angeles court which found them negligent for designing social media platforms that are harmful to children. The jury found both tech giants liable for a combined $6 million in damages. Both companies are reportedly set to appeal. The British Prime Minister Keir Starmer says his government will provide appropriate support to ease an expected rise in household energy bills later this year. Speaking in the House of Commons yesterday, he said the government will act once a 3-month cap on energy prices expires at the end of June. The government has already announced more than £50 million worth of support for households using heating fuel, which isn't covered by the price cap. And industry chiefs have warned the Bank of England that interest rate hikes would do more harm than good. The British Chambers of Commerce warned that investment was already under strain from high taxes, trade friction and global uncertainty, arguing that increased borrowing costs would further weaken confidence. And UK household confidence has sunk to its lowest level under Starmer's premiership as worries over the conflict in the Middle East and rising inflation take hold. The British Retail Consortium said that drop in confidence was the most pronounced in the baby boomer generation, as fears over increased fuel costs, as well as an expected rise in household energy bills, placed further pressure on already cautious households. Well, joining me now, I'm very pleased to say, is Anthony Jenkins. He's founder and chief executive of 10X Future Technologies, and of course, he's the former chief executive of Barclays. Anthony, very good to see you this morning.
Good to see you too.
Who on earth would be a policy maker in this environment? I mean, the Bank of England sits on the horns of a real dilemma here. Obviously, there's inflation coming down the tracks, but they really don't want to risk damaging the economy too much.
Well, it's a very difficult balance to strike, isn't it? Because what's driving the markets, what's driving the economies around the world is the geopolitical situation, and who knows where that's going to end and how long the tail of it is going to be. I mean, ultimately all wars do resolve, but it's just impossible to say. So faced with these countervailing pressures, it's a difficult call.
You're a founder and a CEO. I mean, obviously you're having to think about how you run the business and shape the business for the longer term. I mean, it's very, very difficult to know how to deploy capital in this environment.
It's very difficult indeed. But I always say to my colleagues, let's focus on the things we can control. You know, there's lots of things we can't control, but what's right in front of us that we can do that's going to secure the future of the business. And that means thinking about, you know, where are your core strengths, where do you need to make investments, where can you drive up revenue, how can you manage your costs appropriately. And of course, cost control and cost management in this environment is incredibly important for any business. But what I was interested in is just the piece before where, you know, consumer confidence is down considerably. You think about what's going to drive the economy. It's government spending, we know that's really tight. It's business investment, people are all risk off. And consumers are risk off, and who could blame them?
I mean, you've been quite vociferous on the need for ways in which the UK can improve productivity, which has obviously gone nowhere, really, since the global financial crisis. Is there a danger that businesses and indeed governments kind of put those initiatives into abeyance while they try and navigate this through the short term?
Well, my big thing about this is we think about driving productivity as requiring some massive investment. It really doesn't. If we take a step back and think about where the economy is, we're in a very tight spot at the moment. If I look at the national debt to GDP, it's the same as it was when I was born in the early 60s, and that was the hangover from the Second World War. It's huge, and that is extremely concerning because there's very few degrees of freedom for the government. The second thing is we've had basically very low to no economic growth, and certainly not on a per capita basis since the great financial crisis. So you've got these two forces pushing down on the economy and pushing down on society. So what can we do about it? It all comes back to growth. How do we get growth? And what drives growth? Productivity. Now, people talk about productivity like it's a sort of mythical thing. I don't really think it is. There's some simple things that we can all do to just get more productive. I always say to people, why are meetings always an hour long? I mean, it's just ridiculous. I have a lot of meetings that are only half an hour long. If I need more time, I'll extend the meeting. But if I make all my hour meetings half an hour, I've got a huge amount of time back in my day. And it's same for businesses. Cut out the things that don't add any value. The next thing you can do is streamline processes, take out steps that don't add any value. then you can train and upskill people. We haven't done that as much as we need to do in this country. And that's the last thing you do is automate. And that's where all the AI stuff and the investment comes. There's lots of easier things you can do that can give you real productivity benefits in the short term.
I mean, there's obviously been a big debate about whether improving productivity via AI is going to lead to job losses. And there's been an argument, no, you can put people to more productive use elsewhere. But a lot of the evidence, particularly in the US, but increasingly here in Europe as well, is that AI is turning out to be a bit of a jobs destroyer. If I take London, the jobless rate in London now, which is the powerhouse of the UK economy, is actually higher than the UK as a whole.
Well, I mean, it's not surprising. If you get more productive, you're going to need less resource for any given activity. So the question is, where do you repurpose that resource? We have to accept that AI and other sorts of automation is going to massively change the structure of the economy. I mean, when I think back to when I started, probably when you started, I was working at a branch of Barclays. I used to dictate a letter on a tape, send it to a typing pool, and a physical letter would come back. All those jobs disappeared, but other jobs replaced them. Absolutely. So I don't believe it's going to be apocalyptic, but I do think the change is going to be quite painful.
But obviously you've been very clear. I mean, a lot of your clients now at 10X are in the banking and asset management space. I mean, clearly there are jobs going to be lost there as AI replaces some functions.
For sure. I mean, just look at branch banking. I mean, over the last 40 years, the massive closure of branches in the UK, those were high quality jobs with good prospects and well remunerated. All those jobs have gone. But of course, in my business, we're replacing technology that's 30, 40 years old. Now that can be a massive benefit for the bank's customers and for the bank itself. And again, I think that can create new jobs and new opportunities going forward.
Obviously, we're at quite an exciting juncture for the banking space right now, the rise of the neobanks. Revolut's just got its banking license, of course, after waiting for quite a long time. How easily are the legacy banks going to see off the challenges from the neobanks now that particularly Revolut in particular has a bit more fuel in its tank?
So the thing about financial services is, of course, it's a capital intensive and highly regulated industry. It's not like things like Blockbuster Video that got replaced by Netflix and all the other streamers. It's not like that. So there are some very good reasons why the speed of change is slower than you would see in other industries. Now, having said that, what we do see is a lot greater consumer choice in terms of, where is my bank account? Where is my transactional account? And consumers are savvy. They don't close their account at Barclays or Lloyds on NatWest. They keep it and then they open one with one of the neobanks. So what's happened is more consumer choice, but that's also put pressure on the banks because they have to match the user experience of a neobank, and that is very hard for them to do on their sort of 40-year-old technology.
Absolutely. Now, you wear many hats, of course. You're also on the Bank of England's Prudential Regulation Committee. I suspect if we weren't talking about Iran right now, there'd be a lot more volume about private credit, some of the potential concerns that are arising around that sector. I mean, you have some of these non-bank lenders among your clients. How worried are you about some of the noise that's coming out of that patch right now?
Well, obviously the whole private credit market has expanded very rapidly, and when markets expand very rapidly, as we've seen over our careers, people make bad calls. And I saw Lloyd Blankfein on earlier, sometimes people don't mark things appropriately to market and they don't understand the risk. And of course, all those things don't exist in a vacuum. Then you get these big geopolitical shifts, you get the downturn in the global economy. So I think there's probably more to come in the private credit market.
Yeah, the cockroaches in the kitchen, as Jamie Dimon called them. Yeah, I read in the Times this morning that your old shop Barclays are actually limiting credit to SME customers so they can concentrate on providing credit to their larger corporate clients right now. And it's being suggested that's actually because of some of the hits that the bank has taken on private credit. Would you be concerned if we started getting this elsewhere? I mean, Santander, another one who are on the hook right now.
Well, of course, most small enterprises don't actually use credit at all. They're actually cash positive. But we know that growth in the economy is created in the small and medium sector. I was at a dinner the other night with a bunch of entrepreneurs who are small and medium-sized businesses. It's very tough out there if you're an entrepreneur. Your national insurance has gone up, your business rates have probably gone up. Employment legislation is changing, and people need access to capital to grow their businesses. So I think it's worrying if we see anything that creates a shift across the landscape that disadvantages the small and medium sector, because that is where growth comes from, that's where jobs come from.
Absolutely. What about the housing market? I mean, the UK is obviously very, as an economy, exposed to sentiment in the housing market. House prices have been falling here in London for more than 6 months now. As a rule of thumb, that tends to spread nationwide over time. Would you expect to see UK housing fall this year?
I think it's quite possible. If we see a big hike in interest rates, if the challenges in the Gulf persist, and that creates second and third order inflation consequences, then you could see interest rates going up, and that could dampen down demand for housing for sure. So I think the housing market is going to remain soft for the rest of this year. And particularly uncertainty is just terrible. It's uncertain, and we forget, if somebody doesn't buy a house, it's not just buying the house, it's all the things they do when they move in the house. It's all the things they buy to make the house better. So the knock-on effect across the economy is quite significant. And it comes back to the fundamental challenge that we have. We have to get growth up, and particularly growth per capita.
Yeah, well, let's try and end on a positive note. Prospects for 10x this year, you can still see growth?
Yeah, we're really excited. I mean, what we haven't seen yet is banks pausing the decisions they make to buy our technology, because they're very long-term decisions and they've been working on them for a long time. We've got clients everywhere from New Zealand. We're just about to sign one in the US, and everything in between. So things are going well for us so far. But as I say to my team, you're only ever a day away from disaster, so let's stay focused.
Yeah, don't get complacent. Anthony, it's great to see you this morning. Thanks very much for coming in. Thank you. That was Anthony Jenkins, founder and CEO, of course, of 10x Future Technologies. Well, coming up on the programme, former Goldman Sachs CEO Lloyd Blankfein tells CNBC questions remain over the accuracy of valuation marks in private market fund portfolios. We'll have more from him next. Don't go away.
Volkswagen.
जैन सर।
वीना जी, हाय। मैंने सुना है घर काफी अच्छा बनाया है। बढ़िया है ना राघव? Try some of it. Delicious. मैंने कितनी बार बोला इनको कि टाइल्स बदलवा लो, सुनते ही नहीं। वीना, अरे ये तो देखा ही नहीं। Beautiful. And what is this called? Casa Mood. Dazzling. Take a look at my boom bam party house. Party, party, party house. Party, party, party house. फिर आएंगे हाँ? जनरल साहब तो आज बड़े खुश लग रहे थे।
करण, तुमने ये टाइल्स कौन सी लगवाई हैं?
कचारिया।
क्या बात है?
जब घर में कचारिया टाइल्स लगाओगे
तो लोग तो पूछेंगे ही।
भाई तू पैसा कब कमाता है? हर वॉल पे पड़ता 6 है। इंडिया बॉन्ड्स पे अपना तो फिक्स्ड है।
Fixed returns do not constitute guaranteed or assured returns. Investments in corporate debt securities, municipal debt securities, securitized debt instruments are subject to credit risks, market risks and default risks, including delay and or default in payment. Read all the offer related documents carefully.
दवा इंडिया, ये घर है जिसके दरवाजे हमेशा सबके लिए खुले रहते हैं।
कितना अच्छा लगता है जब कोई बिना बोले हेल्प कर दे, जैसे दवा इंडिया। यहाँ केयर न शर्तों में बनती है न ड्यूटी आवर्स में, तभी तो ये है हर घर की फार्मेसी।
दवा इंडिया, हर घर की फार्मेसी।
VT Walk brings leaders back to the executive turf. This time to explore data security and keeping customer privacy at the core of enterprise strategy.
In the past, people bought protection. Now people are buying trust.
We have, like, for example, in the company, for DPDP and the cyber security put together at least 150 to 200 people only working to protect data and protect the infrastructure and the cyber security.
I think the next frontier for Indian enterprises is going to be cyber resilience. Like, how do you react and respond and recover when the bad thing happens?
And the momentum continues on the greens as CXOs take their best shots, celebrating the grand finale of VT Walk's 15th edition. Catch the highlights at this time.
Premium boarding, premium space, premium meals and more. in India's only premium economy.
But that's the nature of everything. You don't know.
We had a crash in 2000, 2001. If we're in similar territory now, aren't we again?
Yes, we had a crash, but we also produced Amazon and all these other great companies. Yes, look, you can draw a straight line from here back to the past. There's an infinite number of straight lines from here to the future, and you don't know which one is going to be the destination you're eventually going to get to. So you're going to always do things where there's going to be wrong, where some things are going to be wrong, and you wish you hadn't have done it. But we don't know which one. We don't know which large language models are going to work. We don't know, and so I think we're always destined to overdo it a bit in hindsight, but in prospect, you know, the people making these decisions are pretty good at their job. And by the way, they're the founders of their companies, and it's large, and a lot of it is their own wealth tied up in it. Yeah. When you think of the hyperscalers, and they're all still to this day, for the most part, dominated by the founders who are the controlling shareholders, and so I bet with them.
And I bet with them as well. But in order to get to these wonderful companies we have today, the ones that have driven so much growth in the United States. You mentioned
and so
Amazon.
Much wealth creation.
And so much wealth. The Amazons, the Googles, the Microsofts, the Metas. We had to go through a cleansing process from 2001 and for a long, long time. What I'm saying is, are we ready for a cleansing process so that we can sort the wheat from the chaff?
It will have, as I said, there hasn't been a reckoning in a long time. But if we had a reckoning, in other words, if we had to deal with the reality of past investment decisions that have already been resolved, but there are zombies out there that are or assets on balance sheets that are overmarked, it still wouldn't help me know how much we should invest in AI, how good and how effective and how much more productive it's going to make us. And there's a big debate, and it's going on all the time. None of it, in my mind, is resolved. And I would continue with trepidation and care and some anxiety that we're overdoing it, and worry. I would still go forward. I would still go forward where we are. If you're spending $100 billion of research, a single company, in a year, is that going to be the most efficient? No, we're not husbanding those resources. We're in a rush to get it done. Now you could question, should we be more careful? Should we do it slower? Should we be more disciplined? But it's a competitive market. We're competing. These companies are competing with other companies here. And we're competing with we're competing with China and other countries. And so there's no doubt that that we will wish we had not always spent where we had spent, but that's not the same making the judgment that we're overspending today, because we're dealing in a world where the outcomes are unknowable. Once the outcomes are knowable, I'll look back and I'll tell you where the mistakes were.
That was Lloyd Blankfein talking to Steve Sedgwick. Lloyd, of course, in town right now to promote his new book, Streetwise, which is a rattling good read, I must say. And Steve's not the only one to have met Lloyd Blankfein this week. This is me with the great man on Tuesday evening at a reception put on by Goldman Sachs to mark the launch of the new book, Streetwise. Well worth a read, as I say. Just a quick look at the European futures before we clock off. All of them being called lower at the open, albeit not by as much as they were an hour ago. The DAX off 4/5 of 1% right now, looked like being the main casualty. Show you the US futures while we're at it. All being called lower at the open. Obviously a positive session on Wall Street overnight, all being called down, the major indices, by around 1/3 of 1% or so. All of the Asian markets off right now, I should remind you as well. Well, that's it from me for today. Ian King, of course. Ritika currently at the G7 meeting, of course, where she'll be reporting throughout the day here on CNBC. In the meantime, do stay tuned. Squawk Box Europe is up next. I'll be back again at 6 o'clock tomorrow morning. Hope very much to see you then. Thanks for joining me today. Cheerio.
Oh, hello. Need to be intelligent for investing. So vitamin B1, B6, B9, B12.
Oh, hello. For investing, your app should be intelligent.
Trading signal, smart discovery, secure exit. Ask Angel.
Angel One, intelligent one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In a hyper-connected AI-driven world, how resilient is your network? Leading experts decode the future of connectivity, secure infrastructure, and customer trust. Watch CNBC TV 18 and Cisco present Digital Resilience Dialogues at this time only on CNBC TV 18.
मेरा इन्वेस्टमेंट डूब गया,
मेरे रिटर्न्स रुक गए,
मेरा अकाउंट हैक हो गया। अब क्या करूं?
कौन हेल्प करेगा?
कहां करूं शिकायत?
आरबीआई के सचेत पोर्टल पर।
क्या?
हाँ? ऑनलाइन फ्रॉड्स, फेक इन्वेस्टमेंट स्कीम्स, अनऑथराइज्ड डिपॉजिट्स और अन्य फाइनेंशियल क्राइम्स की शिकायत यहाँ करें, जिससे संबंधित संस्था तक भेजा जाएगा ताकि सही कार्यवाही हो।
आरबीआई कहता है,
सचेत रहें, सुरक्षित रहें।
We plan for targets, but do we plan for time?
Today's workforce dreams fast, but peace of mind doesn't come from paychecks.
It comes from a plan to invest in your retirement.
The National Pension System, a trusted, flexible, and fully digital retirement solution. It's simple to adopt and delivers high returns, helping employees grow their retirement corpus steadily. Smart companies adopt NPS Corporate. Smarter employees ask for it.
NPS जरूरी है.
Future security is teamwork. That's why.
NPS जरूरी है.
The world's leading voices gather at IDFC First Bank presents Money Control Global Wealth Summit to decode the big questions surrounding artificial intelligence and geopolitics.
Go hire a lot of AI agents to help you with the business, but don't whatever you do fire anybody as a result.
The world is awash in oil. We just need to end some of these conflicts to ensure a much more stable, secure, and ample supply of oil.
Catch the highlights at these times.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
This is Network 18, and you're watching CNBC TV 18.
Co-powered by SBI, the banker to every Indian, truly.
Let's talk money.
Hello and welcome to a very, very special edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. You can see I have a full house with me here in person in the studios, and I'll tell you why. We are celebrating. We are celebrating the 100th episode of Let's Talk Money. Yes, we've turned 100 episodes younger, and I want to start by thanking all of our viewers for constantly being with us in this journey, giving us your feedback, your opinion, telling us what you want to hear about, and all the comments that you give us on social media as well. It's been a very, very humbling journey for me personally. And I also want to thank a lot of the Let's Talk Money friends over the years who've taught me so much on personal finance, have helped me become a better professional, and only helped increase my passion for financial wellness and financial independence, because I truly believe everything starts from there. So this is a special episode. We have a full celebration. It's a 1-hour episode, by the way, which we'll play over this week and the next. So you already know them. You've met them so many times on the show. But let me quickly introduce once again Feroz Aziz of Anand Rathi Wealth. And we have with us Mr. A. Bala Subramaniam, who is the CEO at Aditya Birla Sun Life Mutual Fund, and Mr. DP Singh, who is the top boss at SBI Mutual Fund, among the largest asset managers of the country. Gentlemen, thank you so much for joining us on what is a very, very special episode for us here.
Thank you. Thank you. Congratulations.
Thank you. Thank you so much, DP sir, Bala sir, and of course, Feroz. I remember conversations with all of you in our old studios, in our old office back then, where we had a very different set. And that's when the personal finance conversations really started for me. And, you know, I realized that It's really about that, right? You have to get your basics right, your wealth, your math, your money management right to build anything forward in life, right? So I just want to start with opening thoughts on your association and journey with us. Of course, SBI Mutual Fund has been a sponsor of the show in the past as well. So very, very thank you. We're very, very thankful for the partnership. So DP sir, you tell us, you've been having these personal finance conversations with us for a long time. What would you say to us and what would your first thoughts be?
Thank you very much, Surabhi, for all the great work you have done during the journey of 100 episodes. But one thing I will tell, whatever we were talking in the first episode, we'll be talking the same thing in the 100th episode.
That's true.
Because we are making the personal finance very simple.
Yeah.
And simplicity is the only constant in the personal finance.
Absolutely.
And simplicity sells. We want to turn, not with the jargons or anything, but the simplicity and the same financial discipline, continuous being there, whether it's war, whether it is COVID time, whether it is the prosperity which is all around. Anyone who has been disciplined in the personal finance, in investing, they have definitely created wealth for them. And every time is an opportunity to create wealth. So same is the case now.
No, that's true, and I think you're absolutely right. If we go back in time and turn back the wheel and look at our earlier episodes, the conversations will more or less stay the same. But Bala, DP sir raised a very important point. Keeping things simple in an increasingly complicated world, the world of financial services itself, every day is throwing up more choices. So it's not easy to keep it simple. I can tell you that from experience. What are your thoughts?
I think it got evolved over time. I still remember when the entire mutual fund industry started in 92, 94. I'm talking about private sector mutual fund coming onto the play. All of us were new to the systems. All of us had to explain the product, how actually the manufacturing is done in the mutual fund industry. Not many had known about how to make the investment, and most of them are actually trying to actually upgrade themselves on how to manufacture a product rather than actually how to invest. I think over a period of time, the manufacturing of a product left to the money managers' expertise. That's why I think fund management got evolved over time. And the investors started understanding, actually, I don't need to know actually how the money is being managed. I must know actually the asset allocation. I'm sure the episode that I'm talking about, 100th episode of yours, has done a great service to the nation, I would say, in making people understand. You must know actually how to save your money rather than how to manage your money as a portfolio manager. There are professional managers are there. And that's something I would say it got evolved over a period of time. And second is the literacy rates in India. I think when you talk about it, literacy rates. So normally we talk about literacy rates passing out, knowing writing and knowing writing and reading and speaking types. So now I think the mutual fund industry has now become quite synonymous in every investment decision that you make. I'm sure this kind of session that is being done by yourself, I think you have been an anchor of financial literacy in the country along with all of us.
Thank you so much.
That something has actually paved way big time and actually making people understand the importance of saving rather than importance of knowing about how the investment happens.
No, absolutely. I mean, and I personally, I think the reason I was drawn into this career, it's been over 20 years, is that I felt that it cannot be rocket science. You apply some basic common sense, some basic logic, ask some basic questions, and you should get to the answer of how to manage your money properly and how to understand a little bit about the market as well. That's what got me here, and I'm still here tracking the markets every day. But speaking of asking questions, we've asked Feroz Aziz plenty of tough questions over the last, I think, 15 odd years, Feroz, right?
Yes.
Telling Feroz late in the night, no, Feroz, can you please give us an example? Can you make it simpler? How does this particular product compare with that product? So Feroz, thanks to you, I think we've all become so much wiser over the years. So big thank you.
Thank you, Surabhi. I think you're doing a big service, and I'll substantiate it with some data of why you're doing so much service. Because see, personal finance is a foundation for everyone.
Yeah.
See, somebody could be a direct equity guy. You don't probably, not everybody needs some direct equity gyan. But even the direct equity client or an investor who has nothing to do with mutual funds needs a home loan maybe, right? So personal finance is the bunyad on which everything stands, right? So, and creating a foundation on that, I think, is a big service to the nation. Now, let me give you some data of why I think personal finance and journalism has had a large role to play, apart from the asset management companies creating a huge education drive using the investor education budgets and stuff. Today also, if the markets are falling, I was looking at the small cap inflow data after the war has broken out.
Yeah.
There's not one day of negative flow in those 36, 37 funds, small cap funds.
That's astounding data.
Astounding. 3,700
This is over the last 3 weeks of this Iran-US conflict.
Can you believe it? Every single day there is a purchase.
So
as
funds
an
are getting
aggregate
money.
small cap.
Yeah.
Because they are getting 300 crores, 200 crores a day, but we have 1,200 lakh crores of household savings. It's not like there's like mavericks buying small caps during a war. They're buying some tiny portions in the form of systematic investment plan. That won't be possible. 10 years back, it would be dramatically different. So I personally think all the education you've done has created a lot of sensible investing.
Thank you so much. Thanks to all of you. And I now want to go back a little bit, for an anecdote in history. I think even when we started this conversation and back in, I think 2005, when I started tracking the markets, every time there was a market crash, the first thing we would call up the mutual fund houses saying, kitna redemption aaya? Are people selling? Will there be more redemption? Will you be selling more? Because investors are pulling out money from funds. From that conversation in 2005 to a very different reality that Feroz is describing in 2026. Mr. Singh, okay, so let's talk about this war, the last 2-3 weeks. What have you witnessed in terms of investor behavior?
See, what happens is what we are talking about, the like small cap getting money. And understand, we are getting around 30,000 crore of SIP money every month. So putting on the working days, so it's coming to around 1,200 crores every day, right? If we are getting 1,200 crores every day through SIP route, whatever the redemptions are there, those are balanced when we look at the net numbers. Right? So the SIP book has been a very, very great, very big stabilizing factor in the market. And second, one more thing, when you rightly put it, 10 years ago there would have been queues for redemptions, but today there's hardly any panic calls even.
And the market is down 10% at the index level.
People are looking for the opportunity, and if people are not putting in money, at least they are not redeeming out of panic. Still, if somebody needs money, in any case, he or she will withdraw, but I have not seen that kind of. Yes, one thing is in the incremental lump sum money is little sitting on the sidelines because nobody knows that then
where is the bottom. You don't know.
So through investor education board, through these kind of programs, through whatever the Feroz team or people saying, at least in a staggered manner start putting in money. So that is what it is. Because market has already corrected 10%. Ultimately, it will come out. Who ever thought that HDFC Bank will be available at 1.5 times? It used to be 3-4 times. Right?
Never traded. I never thought it will fall below 3 times price to book.
That's a different story. Nothing wrong with the asset quality. But I'm just giving an example.
The market can do funny things.
Can do funny things. This happened, but these are all opportunities for building up the portfolios. And I think resetting happens. It's a good opportunity for the fund managers to rebalance their portfolios, and all these things are happening. And I think I've not seen panic setting in as
That's
such.
really good to know. That's really good to know.
Just to extend what DP just mentioned, historically, if you look at the volatility, right from 90s, then coming out of various security scams, then you have geopolitical risk, then we have seen COVID in 2019, and Lehman Brothers collapsing in 2009. And each time when the market collapse used to happen, the one common question used to come, should I redeem or should I invest more? The number of questions used to come for redemption used to be far higher than the investing. I'm talking about the early days. We have to literally convince people that it's the best time to actually invest when there is a huge amount of downside volatility. That's the time you can build your portfolio where you also know actually what price it is you are buying in the market. So that's the beauty in which we always, fund managers used to always say.
So okay, give me an anecdote. Your dealing rooms and your fund managers 15-20 years ago during a market crash, say global financial crisis, the mood and whatever the conversations in the dealing room then and now, what is the difference?
It's an event, a similar kind of order, but this time I think the fall has been far higher. But despite that, the reaction to the market is relatively low. In the sense, fund manager reaction, rather panic situation is relatively low. Mainly because of the maturity levels of both investors and fund managers also improved. So when I talked about Lehman Brothers crisis, we were actually sitting in the market till about 11:30 in the night, trading in the bond market, thinking the next day when the market opens, you will never know what price you are going to get it. And that was the real situation. We were there.
Right.
And next day morning, of course, when we came to the office and we saw the screens, everywhere was red. There are absolutely no issues. And we also seen, even when there was a political crisis, we have seen market hitting the lower circuit.
Yeah.
And the complete panic, the market went to halt for about, say, a few minutes before the market opened. Having seen all such kind of cycles, this time around, despite the kind of fear that is there in the world market, with the oil price going up, definitely the situation is not, we can say, rosy as is ever.
True.
It's something scary as well. But still, maturity levels are far higher because I'm not investing for today. I'm investing for the long term.
That I think is the best silver lining in this case.
The best silver that has come.
That there is a level of maturity that has set in. The level of panic is lesser. People are willing to look at the long term. So that's the great upside to the Indian investor. But you know, we always put a mirror to ourselves on this show, right? So there's a reality check as well. There are certain downsides as well. Are we really still making the same mistakes 10 years, 15 years down the line when it comes to our journey to long-term wealth creation? So let's recap those mistakes and make sure we don't make them after the break.
Let's talk money.
डेटिंग के कंफ्यूजन में टाइम निकल गया? चॉइस के साथ इन्वेस्टमेंट में अब नो कंफ्यूजन। इन्वेस्ट कीजिए स्टॉक्स, म्यूचुअल फंड्स, आईपीओज में। डाउनलोड चॉइस फिनेक्स टुडे। इन्वेस्टमेंट्स इन सिक्योरिटीज मार्केट आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
One decade, one relentless vision. Today that vision rises nationwide, creating modern engineering marvels, setting global benchmarks. Be it mega highways, high-speed railways, urban transport, world-class airports, smart mobility, or power and water infrastructure, the Build India Infra Awards 2026 honors these visionary projects shaping India's future. Watch the celebration on CNBC TV 18.
Every workplace runs on a bond between the people who lead and the people who build. We work together. We learn together.
We plan for targets. But do we plan for time?
The National Pension System, a trusted, flexible, and fully digital retirement solution for companies in the private sector. For employers, zero compliance costs, simple management. Because when people know their future is safe, they perform better every day. Smart companies adopt NPS Corporate. Future security is teamwork. That's why.
Long-term wealth continuity planning is essential today. Srinivas Mendu and Nikhil Mudbhatkal of Funds India Private Wealth shed light on estate planning and succession, tax-efficient structuring, and what it takes to build a truly future-ready wealth strategy. Watch Funds India Private Wealth presents The Future of Private Wealth. Conversations on lasting legacies only on CNBC TV 18.
Let's talk money.
Welcome back. You're with us on a very, very special episode of Let's Talk Money. It's our 100th episode and we are celebrating our century with style, with some of our best-known friends over the years. We have Mr. DP Singh of SBI Mutual Fund, A. Bala of Aditya Birla Sun Life Mutual Fund, and of course, Feroz Aziz from Anand Rathi. So over the last episode or the last segment, we went over just what has changed in terms of investor behavior. And everybody agrees that the Indian investor is far more mature today, despite a full-scale conflict raging in West Asia. But now I also want to talk about the things we've still not learned. 15 years and counting. And this, Feroz, I want to start with, I'll never forget that January 26 moment when after gold prices having surged 65-70%, silver prices having surged 150% last 1 year, investors chose to pour in more than 30,000 crores in gold and silver and less than that in equities. And that really raised an existential question in front of me, ki hum kar kya rahe? You know, all this while we're talking about asset allocation, not chasing returns, public is still chasing returns.
Yes, Ruby, public is surely chasing returns, like you said, right? That has a name called recency bias. You are governed by what happens in the last 6-8 months when you take decisions. That's very difficult to let go. Your heart overpowers your mind. Now, I did one study. Okay. I'm yet to complete that study. I put all the inflows for the last 24 months in gold ETF.
Okay.
Let's assume all the money came from one person.
Okay.
And what's the profit or loss he would have made? I wanted to see.
Okay.
You know, gold has actually gone up 40%, 45% for the last 1.8 years.
All right.
In terms of price. But mutual fund ETF investor is marginally negative. Why?
How is that possible?
Because when they put 200 crores, the first installment, let's assume April 2024, ETF inflow was 200 crores. Let's say, I'll tell you the precise numbers. That 200 crores has made 100 crores of profit. But when it was going up, you had very small amounts where you were making money.
Okay.
When it came down, you had 20,000 crores in January. So that has lost 4-5,000 crores already. When you were going up, you were making money on 200 crores, 100 crores. जब गिर रहे हो, तो आप 20,000 crore पे loss बना रहे हो. So if all this money belonged to a person, he's not made any money in gold. And
but that's true for any asset class, right? You start small with equities, your incremental gain will always be small. Eventually, after 20 years, you have a large AUM, and then when there is a 10% hit on your AUM, so it'll hurt, right? That's true for all asset classes.
No, it's true for all asset classes. Now we're speaking about investor behavior.
Chasing return.
Investor behavior chasing return. But there's still a silver lining in the dark cloud. Now let me give you a study. SIPs, जो सबसे ज़्यादा परेशान करते हैं ना first 1 year में, the SIPs, those are the ones which make maximum money. I looked at SIPs, which made, in the first year, made less than 20% return. See, let's assume Surabhi starts an SIP as a new investor. And 1 year later, she sees minus 20% on an SIP.
Wow.
You will be very dejected. You will be so tempted. DP sir, meri SIP band kar do. You'll be tempted or not?
I'm mature now. I'll say thoda aur wait
No, not Surabhi. It's a very, very wrong proxy of what normal investor behavior is. Now, those are the guys, let's assume less than 20%. 8% of the times, if you started an SIP, 8% of the times you would be losing more than 20% in the first 1 year. If they continued the SIP for the subsequent 4 years, they would again make 13%. So there are 14% of the times you made between minus 0 and minus 20. So if you could hold that one bad year, the subsequent 4 years would have brought you back to 15% compounded return for the full 5-year period. So whatever looks painful in the 1 year, it doesn't mean that your next 4 years will not make up for it. And people are not stopping those SIPs in spite of being new investors. And don't lose hope. You've done a great job is why there's so much happening.
No, I mean, I completely take that point, and it's heartening to know that even as people were investing in gold and silver, but the SIP number was still rock steady during these last couple of months as well. But, you know, let's talk about some of the issues at hand, what Feroz highlighted. You know, recency bias, investing based on FOMO or a certain emotion. So, DP sir, what according to you are, say, the key, you know, cardinal sins or the biggest mistakes that even now, 20 years into this, that investors are still making?
See, again coming back to the SIP story, the people who started SIP, the biggest mistake they are making with their prosperity going up, with their surpluses going up, they continue with the same amount of SIP. It has to top up. Unless until you do that, ultimately you will be making money on a smaller portion. What Feroz was talking about. If you are not putting in money, if you are not stepping it up, you have to have discipline, and discipline of making it higher with the time. When your prosperity goes up, your surpluses goes up, it has to go up. Generally people don't do that. And today, see what is happening, the action is not happening because we have democratized the wealth creation in such a manner, thanks to the programs which we are doing. When I talked about every day we are getting 1,200 crore rupees through SIP, if I put a number, we are getting a trigger of almost 4 million SIPs every day. There are 10 crore SIPs. So 4 million will be getting every day. So getting the action done by 4 million people on a particular thing on day-to-day basis is very difficult. It's basically lazy money. It has to be a little more active.
So basically, people need to top up their SIPs. They need to, review, top up, and when they have surplus funds, make sure they start investing more. Okay, so that's one key mistake.
That's one thing. And second, when they switch over from here to there and they're tracking the best performing funds. In my own case, when I look at my own portfolio, I did one study, as Feroz was talking about study, when had I been putting in all my money every 2 years to the best performing funds, what would, because I've never churned, I've never gone to any of the portfolio. So had I been doing it, what will be the result? I was thinking that it will be 1 or 2% difference, so I'll be getting less. But I was astonished to see I would have made 3% negative CAGR return had I been putting every
year if you were churning your money in the top performing, every 2 years, the top performing fund.
The top performing fund, never look at that 6 months, 7 months, that decency bias. That should not be there.
That's a great example and study that you've done yourself. That chasing a top performing fund is not the way you're going to make money.
Yeah, you
take
can
that point.
Make money and don't take them. There will be cycle. The top performing will become the underperformer. Underperformer will become the top performer. And I think when Feroz can do that because they are doing in a very disciplined manner.
Got it. So do not chase. First of all, top up your SIPs. Make sure you don't remain under-invested even when your income has grown. And secondly, please do not chase top-performing funds. So two clear instructions coming in from DP sir. Bala sir.
Just to add to what DP mentioned, when you chase return, you'll of course get a joy in the short term that I'm actually backing a fund which is actually performing the best. But every fund actually goes through its own cycles because market volatility doesn't leave anybody. Or doesn't spare anybody. A best performing becomes a worst performing becomes a best performing in different cycles. Therefore, the another mistake what people should not do, by way of chasing, you should not stop your SIP. Sometimes when you chase, you stop your SIP, and most of the time when you stop it, you don't start immediately. Therefore, you leave a gap. Therefore, leaving a gap is not the word doing it. Second is when you see this kind of volatility. The worst that people can do is actually stop the SIP. I think if you look at even SIP, the cancellation of SIPs, sometimes it comes because you are scared about the market, therefore you are cancelling it. Or discontinuing it, then you want to come back. Therefore, SIP is not meant for actually, it's for timing the market. SIP is actually for accumulating.
That's true.
People should remember it is a tool of accumulation in order to create a longer term wealth.
And not market.
As Feroz mentioned, especially in SIP, there will be a period of 1 or 2 years, like markets like today. The falling market, any SIP would have done in the last 1 year would be negative.
Absolutely.
That doesn't mean that investment is wrong. You have to understand, I'm not investing for 1 year. And the rupee cost averaging, if you have to take, I think the powerful way of investing and accumulating for long-term wealth through continuous investment rather than timing the investment through the SIPs, cancellation and chasing returns.
Got that.
That's another mistake people should not do.
Got that. So do not cancel your SIPs during periods of market volatility. Chances are that is where you'll hurt your cause the most when it comes to long-term wealth creation. Feroz, very quickly, you want to wrap up the mistakes. I think you came up with almost like 7 sins, right, that people commit while investing. So you want to wrap this up, the mistakes that people need to really guard against.
Trying to compress it, I'll just tell you. One is don't buy complex instruments. We analyzed 1,200 PMS portfolios of clients who have bought and sold. And we saw that whole PMS portfolio of 1,200 families worth almost 7,500 crores. And we saw 92% of them underperformed the Anand Rathi model portfolio of mutual funds. So all this tamjham of tax and cost and all that, minimum ticket size of 50 lakhs, if that for an ultra HNI resulted in underperformance to mutual fund on a pre-tax basis, don't do complex. I don't have one PMS in my portfolio, right? That's one thing. Second, asset allocation has to be on total assets. I met a gentleman, he says, yaar, ye mere financial assets hain, 7 crore ke, baki chhod de. मैंने कहा एसेट एलोकेशन है तो पूरे 22 करोड़ लिखो ना, प्रॉपर्टी भी लिखो, गोल्ड भी लिखो, हैंड लोन भी लिखो, पीपीएफ लिखो, ईपीएफ लिखो, एंड देन यू डू एसेट एलोकेशन. हाउ कैन यू डू एसेट एलोकेशन ओनली ऑन इक्विटी एंड डेट, राइट? टोटल एसेट एलोकेशन is the only way to do asset allocation. And the last one, don't have different yardsticks. Physical asset, 20-20 साल कोई प्रॉब्लम नहीं, and that to compounded return कोई कैलकुलेट नहीं करता, right? So please, if you have the same yardstick for financial assets and physical assets. Just do that. Compounded return, CAGRs have to be calculated both for gold and physical assets if that's the barometer for FDs and mutual funds.
Got that. Okay, so those are the investing sins that we have to avoid. We have become mature investors. That's something that the panel has completely acknowledged. But we need to do better and stop making silly mistakes which are taking us away from our long-term wealth creation journey. So we're going to take a pause here this week on this edition. But the celebrations continue because I'm coming back next week with the same three experts to talk about the golden rules that will really firmly put us on the path to wealth creation and financial independence, even in a turbulent market like the one that we're in now. So keep it with us next week. The conversation will continue. Thank you for watching.
Let's talk money.
Co-powered by SBI, the banker to every Indian. Truly.
ओए, इन्वेस्टिंग के लिए इंटेलिजेंट बनना है तो रूबिक्स क्यूब, जिगसॉ, सुडोकू, क्रॉसवर्ड। ओए, इन्वेस्टिंग के लिए तेरा ऐप इंटेलिजेंट होना चाहिए। ऐप? ट्रेडिंग सिग्नल, स्मार्ट डिस्कवरी, सिक्योर एग्जिट, आस्क एंजल।
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
इच्छाओं की कोई उम्र नहीं होती, आज हो या कल आंखों में हरदम चमकती, कल भी रहे आज के ठाट, ना हो टेंशन रिटायरमेंट के बाद।
अरे नो टेंशन,
हाँ करनी है तैयारी एनपीएस जरूरी है, करनी है तैयारी एनपीएस जरूरी है।
Trying to invest in today's market is like getting stuck in a traffic jam. Too much noise, too many turns. Everyone's shouting advice, but no one's really guiding. That's why you need a weekly investment GPS. Translate market noise into smart signals with insights from India's most trusted fund managers. Get a deeper market understanding week on week so you can grow your portfolio with clarity. Bandhan Mutual Fund presents MF Corner.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
The biggest change which needs to happen when any company is aspiring to grow is actually the mindset change. When you are small and you are, for example, you are going from 1 to 10, I think the decisions are more the founder-led or the promoter-led. So it's more gut-based decision making. But as you intend to grow, the decision making has to shift to more data-backed or data-based. A lot of businesses actually fail to make this transition, which is very, very critical.
This is Network 18, and you're watching CNBC TV 18.
Sir, what do you think?
The new Skoda Kushaq. Easy to love. Skoda.
मीनाक्षी, मैंने सुना है घर काफी अच्छा बनाया है। डिलीशियस। मैंने कितनी बार बोला इनको कि टाइल्स बदलवा लो, सुनते ही नहीं।
Take a look at my boom bam party house. Take a look at my boom bam party house.
जनरल साहब तो आज बड़े खुश लग रहे थे।
करण तो भी ये टाइल्स कौन सी लगवाई हैं?
कजारिया।
क्या बात है।
जब घर में कजारिया टाइल्स लगाओगे
तो लोग तो पूछेंगे ही।
CNBC TV 18 and Cisco present Digital Resilience Dialogues.
So companies have to balance it, and I think that's where the critical resilience question comes in. There is so much technology that is available. There's so many tools available. There's so much excitement around AI, and there's so many use cases that we can already see them applicable in. I mean, we have to say no sometimes with the amount of work that it throws up. At the same time, balancing it with security, resilience, I would also say for us, compliance, because customer journeys have to be done in a certain fashion. Security, compliance, all of that for financial services becomes a very critical part. And I think that is where the trick is, and that is where companies should not slip.
CNBC TV 18 and Cisco present Digital Resilience Dialogues.
हम बस इतना ही चाहते हैं कि आप अपना ख्याल रखें ताकि आपको हमारी जरूरत ना पड़े। पर अगर कभी जरूरत पड़ भी जाए तो हम यहीं हैं आपके आसपास।
थैंक यू। क्योंकि ये है दवा इंडिया, मेरा और आपका सबका ख्याल रखने वाला। तभी तो ये है हर घर की फार्मेसी।
दवा इंडिया, हर घर की फार्मेसी।
No negotiations have happened until now. I say this with certainty that we've had no conversations and negotiations.
European stocks set to fall while oil rises as investors reassess the chances of a ceasefire. Former Goldman Sachs CEO Lloyd Blankfein telling CNBC that investors should tread carefully.
This would not be the time to have your maximum risk that you would ever take and be very fleet of foot and very protective of your position. I think people should be good contingency planners at this time.
NATO's Supreme Allied Commander for Transformation tells CNBC the military alliance is confronting new forms of warfare in the Middle East and Ukraine and urges Europe to take on a greater leadership role.
So during 30 years, and especially on the turn of the century, most of European countries have been free riders from their own security. They downloaded or outsourced their defense.
Markets really picking up on negotiations between the US and Iran as we were reporting the headlines yesterday through intermediaries and hoping that there could be some sort of resolution or off-ramp in sight after escalation of the conflict and concerns of some sort of further regional disruption that keeps on spiraling. But markets are leaning positive yesterday around some of the news flow, and you could see it was a pop across the board. Stocks on the NASDAQ in particular leading the way 0.75%. And don't forget there has been an element of caution even a day earlier in some of those FANG Plus stocks over the course of the week. That FANG Plus ETF down to the tune of 2%. So the NASDAQ having a better day of it yesterday. Some of the top performers as you take a look at the S&P, it was Nvidia, that stock rallying, so Mag 7 stocks back in focus yesterday. But over the course of the week now, we're still sitting on some gains. The likes of the Dow over the course of the trading week up to the tune of almost 1.9%. But we are again coming up against a further challenging backdrop. The Iranians denying that they are effectively desperate to do a deal and setting out their own metrics for ending the conflict as we again talk about escalation from the American military side as we head into the weekend. So markets likely to be more cautious today, and we've already seen that some of the futures action. To the Asian markets where some of the pattern has already kicked off in the session, you can see we are downbeat today. The Japanese stock market down about a 0.25% plus. The rise in the oil price, again, a further challenge for the Japanese market, where there are very few offsets here around that energy story for Japan. We're down 2% on Hong Kong, and across the board you can see to the South Korean market shedding close to 3+%. So that market very much on the back foot. And that is the theme we've been talking about, where some of the very strong gainers from last year, the real stellar performers, have been hard hit the most during this conflict. That is where investors have liquidated very quickly, whether it's risks around the conflict, but also as to whether it's just liquidating, trying to cover other positions around margin calls. To what we're seeing on European futures. The early picture for Europe on the back of, again, fresh gains yesterday as we recovered territory. It was a day of just really jumping off the low points that we saw on some of the sectors and on some of the indices. So whether it was real conviction trade or whether some we're trying to call the bottom of the market and just tentatively wade back in, the market this morning, they're looking to be on the back foot from the outset. 9/10 down on the 50 futures, so the big stocks in Europe. FTSE futures seen down by about a third and 1% down for DAX futures, but not exactly an entire give back of the 1.4% that German stock market claimed in trade yesterday. To US futures, and this is the early picture, and again you can see it looks much more cautious from the early hours. It looks as though the US markets will be in the red this morning.
Goldman Sachs former CEO Lloyd Blankfein has warned that the damage from the Iran war is going to last even if there were a resolution tomorrow. Speaking to Steve, Blankfein also weighed in on the recent market volatility.
It might turn into a major economic. It is a downturn at the moment, but the market is behaving as if it's not going to be sustained. It's very consequential. It'll last some time because infrastructure. Everybody's staring at the price of oil, and that's going to be affected for at least some time just because of the injury to the infrastructure. So that could be. But there's a lot of other competing considerations. At the end of the day, economic dislocation, a lower stock market, higher interest rates, it's not existential. I would say ballistic missiles with, and the nuclear weapons, that's existential. And so it depends on how credible you think the threat was, how unique an opportunity this was to get rid of the threat was. And so, people are going to debate this, but I would say that it's certainly an objective to get inflation down, to have a lower price of energy, which is important to the supply chain, to maximize employment. Those are all important, but other issues pop up from time to time that displace that are more urgent, sometimes existential. The president has identified this as one, and people can say, no, it really wasn't. And I'm sure everybody's focused on whether it was the imminent risk, and then somebody might point out that the risk might not have been imminent, but this might have been the best opportunity to deal with a situation that inevitably at some point would become imminent. So I'll leave that to the other different set of talking heads to debate that. But I can understand how we are where we are.
Can you understand where we are on markets? Because I think I've picked up some commentary from you that you do have some concerns about the complacency of markets. The market is pricing in a scenario where it thinks this is going to have potentially a benign outcome, a short-term outcome. But actually, do you think we're too complacent in valuations?
Look, I think, frankly, if you're a risk manager or even a risk taker, I think we're not in the realm now. It's too hard to forecast and too consequential depending on which side of a line something falls. I don't think anybody really knows at this point. I think we're in the realm of contingency planning. I think you have to have a strategy if it goes this way or if it goes that way, if it looks like it's going to be longer term. And by the way, there's now a middle of that, because originally the market was saying that look, we had a situation where spot oil was trading over 100 and the forward was 75. Now the forward is higher because people know that even if it stopped tomorrow, there's been so much damage to the infrastructure that's going to last. The stress is going to last longer anyway, even if there was a resolution tomorrow. There's no reason to think there's a resolution tomorrow. And by the way, it's dangerous for risk takers and risk managers to go on the basis that it will all be resolved, and it's also dangerous to say that it's never going to be resolved because people, as you know from your own market experience, you could put on hedges, and those hedges could be worthless tomorrow if things go in other ways. I think you just have to stay in this market closer to home, not take, this would not be the time to have your maximum risk that you would ever take, and be very fleet of foot and very protective of your position. I think there are other times safer times when you can express a point of view about outcomes. I think people should be good contingency planners at this time.
Blankfein also warned of a potential reckoning in markets, saying the longer there is between crises, the worse it could potentially be.
There hasn't been a reckoning in a long time, so there's a lot of inventory on people's balance sheets that may not be marked, well, because there's been no forcing function. You haven't had the crisis of the century for a long time. We used to have the crisis of the century every 4 or 5 years. We really haven't had that since the global financial crisis. And we're in a period now where private equity isn't selling its inventory of prior investments, even though we've just come off of a great equity market and a great financing market. And so so you wonder, gee, maybe these things are marked a little bit. It has to be a reckoning. We haven't had one. The longer between reckonings, the worse it could potentially be.
US space stocks jumped amid reporting that SpaceX could file to go public as soon as this week.